G'day traders, Stacey Burke from Stacey Burke Trading. Today reviewing our day trading 1 hour a day. And being the beginning of the month, we're going to just go over the basic concepts. We're going to look at some trades, and we're going to just review and hammer home the simple strategy that I use, and a lot of questions regarding the numbers and levels, and just going to keep it really simple and address the basic main setup that I look for pretty much every session. But we'll look at the majors and also how this applies over the course of 3 days and beginning of the month. Very important, as we can see some directional shifts or some continuations for the first week of the new month. Now again, just reviewing and hammering home, identifying your best setups. Now I have a couple of setups basically. I have a sell high, a buy low, a trend setup, and a reversal setup. And it's as simple as that. And that is pretty much my main focus. That is all I do. And the timing of these is Asia, 8 to 11 p.m., New York Eastern Standard Time, Europe and London, 2 to 5 a.m., and New York, 8 to 11 a.m. Now, these are the specific time windows that I focus on. Obviously, there are other trade opportunities at different times. There may be trades in the time between, especially at the higher low of the week, or if we've had an extended out range in London or Asia, etc. But the new session coming in, if you're in North America and you wake up in the morning and you haven't watched Asia London, this is still applicable. If you've been in a U.S. session trade overnight, the Asian session will be applicable, because remember, a simple concept of who's in the money. Nobody gets a free lunch. I had a trader mention to me last week they had a free lunch, and that's great. I'm not in the market to sit around on stuff for hours at a time. My strategy is to capture a move and be out of the market and not sit around and trade more or keep trying to get pips. I'm not interested in pips. I'm interested in setups that I can scale up in size and shutting it down and coming back later. The market wants you to keep trading. Understand that. I saw some information that somebody shared with me about from another guru about just crazy stuff. Master some simple setups. Get really good at executing them. Understand how you can scale those up in size, how they're repeatable. If they are indeed repeatable, and you're following enough instruments. Now here's my biggest tip. I'll just type it in here. Master a few. We'll start this. Master a few simple, powerful setups. Then find enough instruments that give you those setups over and over and over again. It's that simple. If you can do that, you'll get your best setups over and over and over again. Now, hopefully that makes sense, because then you're trading your best trading setups, 2 or 3, whatever that may be. Market has 3 different types of conditions. We have trend conditions. Market breaks out, pulls back, continues, or it's in a trading range, or it's in a false break reversal. So those 3 types of conditions, you may have setups that fit into one of those conditions when it presents. Some of them may be scalable, some of them may just be scalps. I'm looking for stuff at the higher low of the day. That doesn't mean that I'm counter trending. I want to trade with the trend. If the market's going down, I want to sell near the high. If the market's going up, I want to be buying near the low or the low of a session. If it's going down, I may want to sell the high of a session. Major round numbers. So we're going to talk about the 100 pip box today. A lot of questions about this, and this is just going to show the most simplest understanding that you can possibly ever grasp out of this. M's, W's, engulfments, pin hammers, risk management, profit target, shut it down, and review. A really simple example on gold today. I'm not going to get into other time frame analysis or anything, but I just look at really simple stuff. The market had been trading down the last couple of days. We had a first red day on Friday. The market's broken down, but what I look at is when the market opens on Monday. And we'll just bring this back up, our Monday separator. Okay, now coming back to understanding the box. I'm just looking at a 100 pip box. It's just this literally this simple. I'm going to type in some stuff that hopefully hammers this home, and we'll look at some major pairs, how I apply this. It's the same principles, but obviously with gold we may get more movement. Same with NASDAQ. Level 1 is 0 to 25. Okay. Level 2 is 25 to 50. Level 3 is 50 to 75. And above there, of course, is level 4. Now, without getting too complicated, the very basic model of this is that 25 pips above the box could be a false break. 25 pips below this area, below this 100 pip box, can be a false break. That does not mean that I'm trading these. It all depends on the behavior of price and the timings, coming back to our timing window. What I'm looking for is if the market comes up into level 3, is it giving me a sell setup? Okay, we had a peak formation on Friday night. We have lower highs that have gone into place into the close heading into the weekend. Okay, and so again, I'm looking for, if I'm at the high of the day, I'm looking for a level 3 M pattern. If we're up high, it's an M. If it's down low, it's a W. The market comes up in the first 15 minutes, makes a high in the second 15, comes back towards the end of the first hour, and again, guess how long this took? This took 45 minutes. Now, if you go back and watch my past videos, I typed this out and I said 45 minutes. Come and look 45 minutes into the hour. We're up high, 45 minutes into the hour. They give us an M formation. The market then proceeds to break down below the M before pulling back at the end of the hour, and the new hour then trades off of 50. Now, coming back to our simple concept, if this is a 100 pip box and this is our 3 levels, level 1 is what I would look for longs coming out of this level. If it was a long setup, I'd be looking to buy in the bottom of this box. If it's a short sell setup, I'm looking to sell up in the upper third or upper quarter, depending on where our M or W formation presents. 3 levels of rise gives us a 75 pip high-low. The market pulls back at the 45 minutes into the second hour before engulfing and proceeding to drop down. Now, this is just a modified version of a pump and dump pattern. So all I am really looking for in any session is a pump and dump opportunity. That's all that this is. The pump and dump can be a stop hunt. It can be a pullback within a move. Again, it all comes back to timing. And I want to emphasize, this is at the opens of the session that I am looking for this. I am not looking to buy it down here because I'm on level 1. This is a short trade. And I also told people, and I repeat this over and over again, once the market makes its move coming out of a level 3 up here, if it's level 1 down below, it's level 1 for the long. I have made this very, very clear. Do not counter trend level 3. If it was a long trade, I would say don't counter trend level 1. And the reason is that they aren't coming back. So we have people trying to counter trend this because they're looking for the W or the M. The move is already in process. So coming back to a really simple concept, we have 3 levels of rise. We have 45 minutes. We have level 3. We have our M. We have an engulfment after the M. So if traders are not getting in anywhere in that right shoulder, so they've traded up to the high, they've locked that in. If nobody's gotten in here, you can trade the pullback into the 50% area. 45 minutes into the second hour, an engulfment for the short trade back down to the previous day's low, which again also can become a starting point for a pump and dump into the close of the evening. Now, we're not going to talk about the false break scenarios. We can apply it over here, this 25 pip range extension above, coming off 50% as our anchor point, pump and dump before payrolls. And again, you'll count 3 levels of rise and an engulfment that occurred after payrolls. But I don't want to go into this because I don't want people thinking that once it goes 25 pips outside the range, they can buy or sell. It doesn't work like that. It has to do with the pattern on the day and the setup and the timings. So looking at the yen crosses this morning, we had the pound yen, we had the euro yen. All of them were on, we had 3 pushes on Friday night, again up to level 3 on the euro yen. On the pound yen, we had 3 pushes up into the double zeros. And on the US yen, we had 3 pushes up and a peak formation into 0, and the market closing at 50. So I saw volume trapped on these 3 pairs, all up in the upper quarter to half of the 100 pip box. Now, if we just take a quick glance at these, you'll notice that the yen itself opened between 50 and 75. Euro yen opened between 25 and 50. And the pound yen opened between 50 and 75. So again, pound yen and US yen up near the 3rd level. And again, these are just setups that I look for. So again, we had a peak formation put in at level 3 on the pound yen. The high is locked in before the session begins, and there's a first bar engulfment trade on the pound yen right off the bat this morning for a 35 to 40 pip move down. Now, this is where I like to be in a move like this and take profits and walk away and grab this cash. I'm not worried about the market reversing. I'm not trying to trade in both directions. It's entirely a trader's decision. If this may be the long trade that a trader was looking for, because they can say, well, there was 50 pips back up. I'm looking for trades where I can get in and it's going to blow off and I'm done. That's it. That's all I want to do. It's really simple. Level 3, peak formation. They locked it in. They came back inside. They put peaks inside of the peak formation. Okay, they're trading back up into the high. Engulfment right off the start of the session. First bar trade and a 25 to 40 pip move down. Again, the euro yen I did not look at. It was trading from 50 down to a quarter. Nothing wrong with that, but I like the pound yen because it was on level 3. US yen almost got to level 3, but again, not quite as good as the pound yen. And you'll notice the difference only being that the pound yen got up above the numbers, whereas the yen traded up underneath before putting in a possible high. It traded back up into that just prior to the session, and then an engulfment for a 25 pip stop hunt trade down. Coming back, just looking at the volume on this chart, understanding there were higher level longs right at the rollover that were low-hanging fruit for an easy scalp. So again, just emphasizing, I'm looking for markets that are going to give me an easy trade right at the beginning, and then I'm done and I shut it down. Now, I know that, again, traders may be wanting to take the second trade. That's entirely your choice. I'm emphasizing I'm looking for where the market is about to crap itself. I can get in, have easy money. Those are scalable, repeatable setups that will show up over and over again, not just for shorts, but for longs. Again, asking yourself, where are traders caught? Who's in the money? Somebody's gone long here right off the bat, or they've been long from Friday night. Just like traders were short on Thursday night heading into Friday morning, and they're trapped heading right into the Asian Open for a vertical 50 pip plus move coming out of level 1. So again, an example of where the market has traded up into level 3, but it's a reversal. They're going vertical 25 pips below into the next 100 pip box for 3 levels of rise. And again, understanding the difference of these setups. So as I start the week, I will just look at all the major pairs and again just take note of where we are starting the week. On the euro, for example, we're starting in a 100 pip box. We're in level 1. This could fail at the quarter level and roll over. And then that would give me a thesis if I was looking for something possibly shorting down in that euro. in the London or US session. It may stay up in level 1, breakout pullback, and continue to trade back up on these lower level shorts. No idea, but right now we've started the week off in level 1 in a 100 pip box. Sorry, that's the pound. Again, if we look at the euro, I can scrunch this up. Keeping it simple, we're in a 100 pip box after falling through last week, breaking down, and we have level 3 trading off of that Friday. We're right at the 50% area of this current 100 pip box, so we're right in the middle. We have possibly low-hanging fruit from Friday night's low down here, which could indicate we possibly maybe see this pair retest the low of Friday and go down into level 1. No idea. Time will tell. And again, movement does not necessarily indicate there is a trade opportunity. It may just be a creeping trend down. It may not be a decent trade. Again, I'm looking for stuff that explodes in 25 to 50 pips, whatever that may be. But this is as simple as I get with my setups. I'm looking at the 100 pip boxes, Canadian dollar. We have we're in level 1. Again, we may have a peak formation last Wednesday. They've traded back up above on Thursday and locked in that low potentially. We may see this market trade off of level 1 and back up long, or it breaks down and pulls back and rolls over, and we revisit Friday's low. No idea, but we're currently in level 1 in an upper 100 pip box. We may see this market retest the high from last Monday. So whatever pair you're looking at, it could be the NASDAQ, could be oil, could be major pair, I keep it that simple. I'm looking for opportunities into the session for either a long move, again, at a level 1, or a short trade, low of the day, level 1, a squeeze for the long trade, or a reversal trade out of level 3. And again, that can be a squeeze after they've locked in the high coming below the high. I'm not trying to get in front of the high or the low. I want to see them lock it in first, where I can position myself for that move out of level 3 or out of level 1. And once again, do not counter trend those moves. Once they start to go, they will not come back. And if you're counter trending them, you'll get smashed. So hopefully that makes sense. Keep it simple, traders. Simple, repeatable, scalable. That's the whole object. Have a great trading session. Start the week off strong, and may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.